Good morning, ladies and gentlemen. A very warm welcome to you on Market today. I am Shail Bhatnagar, joining you from what is a very rainy and a very calm New Delhi. A very warm welcome to you on the last day of June's fantastic market. We are on Friday, and of course the first day of the July FNO expiry. But first things first, for those who were awake till 2 a.m. last night watching the men in blue, it was raining runs in the first half when India were batting, and it was raining wickets in the second half when India were bowling. So get ready, tighten your seat belts on for June 29th, and we are going to have a party even then. But for the matter at hand, ladies and gentlemen, let's look at our fantastic markets. There is a bigger cricket match being played by the Nifty and the Bank Nifty, and both of them are doing a fantastic job as far as the month of June is concerned. As always, we will start with the with our daily chart of the Nifty, and that's there right in front of you. A very strong momentum which propelled the index beyond the 24,000 level. Needless to say, it's a record high. You can see that the rally is not only a month strong, but it's doing dramatically well this week. The low was 23,350 on Monday, and from then on we've accelerated to 24,044 on the Nifty, and there is more to go. Why is there more to go? Because today being the last day of June, it's the month end. It's also the end of the first quarter of this financial year, and also the end of the first half of calendar 2024. It essentially means mutual funds will do their best to file a very decent net asset value for their monthly checks on NAVs, and therefore you'll see a lot of momentum coming in. In any case, markets are red hot with block deals, markets are red hot with transactions, and markets are red hot with all sorts of large caps doing wonderful rallies. Let's just take a very deeper look into what the markets are trying to tell us today. And of course, a lot of data is right there in front of you. Let me just briefly look at some points that are acting in the favor of bulls. Of course, the trend of the Nifty is dramatically up. We've added about 7% in the month of June, and we are likely to head even higher on this day. But there are some signs of profit booking that we see coming in on Bank Nifty. Therefore, you are requested to be extremely cautious on the long side. Medium term, which is the monthly charts, the weekly charts for major indices appear overstretched, and this possibly is not the time to enter, but it is definitely the time to keep on with your existing trades and keep on raising the stop losses higher just as the indices progress further. There are a lot of block deals and large trades that are dominating sentiment. Yesterday was the transaction between Ultratech Cement and shareholders of India Cement. About 23% stake by a very well-known large investor was sold to Ultratech Cement. Keep that in mind. There's a lot of froth, lot of activity happening in the telecom space. Yesterday night, Reliance Jio, the largest telecom service providers in India, raised its tariff plans by about 12 to 25%. The blended increase is about 20%. In any case, you've seen a very sharp rally coming in Bharti Airtel, which will now increase prices following Reliance Jio. Ditto for Vodafone Idea. Bharti Airtel is at a record, Reliance Industries is at a record, Vodafone is in a very sharp uptrend, and Indus Stars, this is the back-end wireless services network provider for all three telecom majors, also in fine shape. So we'll be keeping an eye on telecom. As far as the options data is concerned, ladies and gentlemen, look at the Nifty. 24,000 for you. In fact, 24,444 is the close. While it's difficult to see a further upside, but what is happening is that in the first 15-20 minutes the markets dip either towards the daily pivot or the first support level, or if sentiment is not all that good, to the second support level. From then on, the rally starts and it accelerates the moment Nifty crosses an intraday high. We've seen that happen over the last 3 or 4 trading sessions, and that is the strategy. Buy the dip towards 23,900, 23,850, 23,800 if you get the occasion, and then wait for resistance to emerge at 24,100, 24,200. 24,200 definitely is a very strong resistance, where a lot of Nifty bears have done a lots of call writing. FIs have covered most of their short positions and are now, ladies and gentlemen, net long to the extent of 3.11 lakh contracts on the Nifty futures index. Remember, on June 4th, they were net short 3,19,000 contracts. This is a swing that has happened, and that has taken the Nifty and the Bank Nifty higher. Rollovers, which we saw yesterday, are very, very strong on the Nifty. They're aggressive on the long side, 76% of the long-term average versus 70% in month of June, and versus a 6-month average of about 67. So Nifty remains strong. What you need to do, ladies and gentlemen, is if you don't believe in this rally, just don't short it. Remain on the fence. When the markets correct, get back in, but this is not a market to short because of intense liquidity that is coming into equities. Stocks to watch, ladies and gentlemen, we have Z Entertainment. This is a stock that I am watching for 2 reasons. One, the counter moves out of F&O segment, and of course starts life afresh in the cash markets. You need to watch Z because it's corrected very sharply, and probably a lot of developments on the corporate side are also beneficial for the long-term health of Z Entertainment. The rights issue of real estate developer Sobha begins. The stock has been at a record high. The value of the rights is at 1,651 rupees per share, and the amount that the rights is about to raise is about 2,000 crores. Let's look at some other stocks that are likely to be impacted in trade today. It's KIMS. This is Krishna Institute of Medical Sciences. The counter is heading for a 5-for-1 stock split, which is effective today. Keep that in mind. And of course, we'll have the listing of luxury sofa maker Stanley today. The IPO was priced at 359 crores, 359 rupees per share. The company raised about 600 crore rupees, and the issue was oversubscribed a phenomenal 60-65 times. As usual, there are huge block deals again settled, and those are from HCL Tech today. HCL Tech's owners are likely to sell 1,757 crores worth of shares today at 1,415 rupees per share. That's a 2.5% discount. Keep an eye out on that one. Polycab, there's a 2% stake sale from owners at a base price of 6,535 rupees per share, which works out to be a discount of 6.5%. The deal, which is a 2% stake, will raise somewhere like 2,000 crore rupees. And of course, you have a transaction coming in on Sami Hotels at about 187 rupees per share. The deal size is anywhere between 120 to 193 crore rupees, and up to 5% stake will be sold by one of the foreign funds, which is JTI Capital Alpha. So keep these in eyes, and of course there's a whole host of news that is coming in. What's also happening, ladies and gentlemen, is this heavy rain that has come in Delhi has sort of disrupted a lot of activity on the aircraft and air aviation side. What has happened is that since 12 a.m. till now, 16 departing flights have been cancelled, and 12 flights that were to arrive in New Delhi have been cancelled due to bad weather, as also inclement rain that has impacted air traffic. Not only that, there are news that some parts of the airport have become non-functional. What we will do, ladies and gentlemen, is that we'll get Mr. Himanshu Mishra. He's joining us. He's a reporter with the India Today network, and he's at the T1 airport where some activity has happened in terms of a collapse of roof. Himanshu, if you can hear me, please provide us with the latest update. बताइए T1 पर क्या हो रहा है? Okay, what we'll do, ladies and gentlemen, we'll await Himanshu's arrival, and at the same point of time you can just see the damage that rains have caused in Delhi's airport, which has resulted in the roof, part collapse of a roof at the airport. Keep that in mind, ladies and gentlemen. And of course, what we will do now is speak to Kiran Jani. Mr. Jani is with us, and at the moment let's discuss how markets are functioning. Kiran, a very good morning to you and a very warm welcome. 24,000 on the Nifty, and of course almost 53,000 on the Bank Nifty. How do you see July's FNO expiry panning out, and if you can share rollover data with us?
Yeah. So very good morning, everyone. I just want to start today's day with one simple quote that everyone is waiting market to crash, and market is waiting everyone's patient to crash. I may not say it crash, or maybe people is waiting for corrections or a deep to buy, but the way since last 4 days market is keep moving high top high bottom pattern is showing a strong bull run or a sustainability of our market. Secondly, why market is going on? Everyone's this question is going in everyone's head. So basically, no news is a good news for the market, and that's the only reason market is keep moving on a high top high bottom pattern. We have supposed to have our budget, and this is the interim budget again. After 6 months, we're going to have a proper budget. So there are so many expectations from this budget for the infra, for the cement, for the PSUs and other sectors. And for that only reason, the market is keep moving on higher top, higher bottom pattern. Now, second half of this year, we are supposed to have a US election. And from that part of the world, we are also receiving a good news, or maybe there is no bad news again. So these are the sentiments that market has a very powerful sentiment, number one. Coming to the rollover data, or overall, if you check out the cash market data also, FII is slowly and gradually turning into the buy side, number one. Looking at monthly FII net buying, you can see 24,000 crore of total cash market we have seen buying. And since February month till now, FII is a net buyer on month basis. Coming to the rollover data, Nifty has seen average 3 months higher than average 3 months rollover data, which is again a positive sign. If you check index wise or particularly stock wise, Nifty rolled over with the long build up kind of a sentiment. We have seen last 5 days, Nifty got increased open interest by 200%, and Bank Nifty open interest increased by 60%, which is a significant, and that's the only reason market is moving, keeping high top high bottom pattern. Now coming back to the level wise, 24,000 again a psychology number. Market chased that number and sustained also. Today is the weekly close, today is the monthly close is also there on the Nifty. So 24,000 going to be a very crucial for today. On intraday perspective, if 24,000 reached down, then there are chances we can expect some profit booking towards 23,800, 23,700. Looking at the momentum indicator of Nifty, which is reading at somewhere around 70, and previously we have seen the momentum indicator whenever it's come up near 70 to 75, we expect some profit booking. So remain cautious on index point of view. Wait for a dip to enter. If you are holding any long position, keep a very strict stop loss of 23,900 or maybe 23,950. Higher side is capped with 21,200 as maximum open interest we are seeing for next month over there. So 24,200 going to be a resistance. 24,000 going to be a support. If 24,000 broken down, then we can expect some profit booking. So buy on the dips would be the strategy. No chasing even at gap up.
Right. Okay. Let's get in touch with Himanshu Mishra. He's at the airport of T1, and there is a portion of the roof that has collapsed, and of course because of heavy rains the air traffic has gone for a toss. Himanshu, if you can hear me, firstly good morning and a very warm welcome on market today. How do you think is air traffic likely to be restored? What's the latest? बताइए क्या हो रहा है फिलहाल?
फिलहाल तो 2 बजे तक जो यहां पर जो खुद ही जो पैसेंजर, उनका कहना है कि 2 बजे तक के लिए जो एंट्री है वो बंद कर दी गई है। और सबसे सीधी तस्वीरें आपको मैं दिखा रहा हूं, आप ऊपर देखिए, जो डिपार्चर का जो पूरा हिस्सा है लंबा, तकरीबन आप कह सकते हैं ये 50 मीटर से ज्यादा लंबा जो पूरा स्ट्रेच है, यहां से लेकर के दूसरी तरफ आपको दिखाएंगे। कैमरामैन से कहूंगा वो जूम करके वो दूर तक आपको पूरी वो दिखाए। वो छत जो है वो कोलैप्स कर गई। अब देखिए गनीमत क्या थी, गनीमत ये थी कि ये T1 था और यहां पर लोग बेहद कम आते हैं, क्योंकि जो ऑपरेशंस है ट्रैफिक जो वो बेहद कम है यहां पर। और सुबह 5:30 बजे जब फायर सर्विस को कॉल मिली तो उस वक्त यहां पर लोग बेहद कम थे और इसीलिए इतना लंबा स्ट्रेच जो है वो गिरता है। उसके बावजूद चूंकि लोग कम थे तो 4 के करीब लोग बताया जा रहा है, 3 से 4 लोग इस मलबे के नीचे दबे। और अभी अभी जो कंफर्मेशन मिली है हमें अथॉरिटी से कि एक डेथ कंफर्म की गई है, कि एक शख्स की मौत हुई है जो इस मलबे के नीचे आया। अब किस तरीके से यह हादसा हुआ, किन परिस्थितियों में यह हादसा हुआ, क्या कोई कमी थी, क्या देखरेख में कोई कमी थी, ये सारी चीजें अभी इन्वेस्टिगेशन की हैं। क्योंकि जब हमने एजेंसीज से बात की तो एजेंसीज का क्लियर कहना था कि उनकी जो फर्स्ट प्रायोरिटी है वो प्रायोरिटी है जो इंजर्ड है उनको अच्छी मेडिकल दिलाना और इसके बाद मलबा क्लियर करना और उसके बाद जो ऑपरेशन है एयरपोर्ट का वो शुरू करना। क्योंकि बड़ी संख्या पे यहां पर जो पैसेंजर्स पहुंचे थे, हमने जब उनसे पूछा तो उनका कहना था कि उनके पास कोई स्पेसिफिक जानकारी नहीं थी और यही वजह है कि वो सुबह के वक्त एयरपोर्ट पर पहुंच गए थे। तो अब देखना ये होगा कि जब 2 बजे के बाद अगर यहां पर शुरू होता है तो क्या कुछ निकलकर सामने आता है और क्या पता लगता है कि किस तरीके से यह हादसा हुआ। जी
जी, तो हिमांशु जी, अभी तक जो खबर हमारे पास है वो ये है कि 2 बजे से वापस फ्लाइट्स रिज्यूम होंगी। क्या कुछ ऐसी फ्लाइट्स हैं जो फिलहाल लैंड कर रही हैं या बिल्कुल ही पूरी तरीके से दिल्ली का ये शानदार एयरपोर्ट फिलहाल बंद है?
बिल्कुल बंद है, पूरी तरीके से इस एयरपोर्ट पर ऑपरेशन बंद कर दिया गया है। और आप देखिए यहां पर जो एंट्री गेट है उसी को बंद कर दिया गया है। यहां पर किसी को आने नहीं जाने दिया जा रहा। जो अंदर का रास्ता है वो 2 बजे तक के लिए फिलहाल की जो जानकारी है, हो सकता है कि ये टाइम आगे और भी बढ़े। फिलहाल 2 बजे तक के लिए बंद कर दिया गया है। दिल्ली पुलिस तमाम जो एयरपोर्ट स्टाफ है यहां पर मौजूद है और जो लोग यहां आ रहे हैं उन्हें आगे की तरफ जाने के लिए कहा जा रहा है। अभी टर्मिनल T2 से टर्मिनल 1 के बीच लोकल फेरी है वो यहां पर चलाई जा रही है। क्योंकि जो लोग यहां पर पहुंचे हैं उन्हें जिन्हें अर्जेंट है वो T2 जा रहे हैं और दूसरी अपनी जो अल्टरनेटिव जो फ्लाइट्स हैं उसको वो ले रहे हैं। जी
हिमांशु जी, एक फाइनल बात आपसे ये पूछनी थी। जैसे T1 तो फिलहाल बंद है, लेकिन T2 और T3 जो 2 और टर्मिनल्स हैं दिल्ली एयरपोर्ट के, क्या वो ऑपरेशनल है या वहां पर भी किसी तरीके की रुकावट देखने को मिली है?
नहीं, पूरी तरीके से ऑपरेशनल है। T2 और T3 टर्मिनल पर किसी तरीके की कोई भी दिक्कत नहीं है, न फिर आप कह सकते हैं कि वाटर लॉगिंग या कोई भी ऐसी समस्या नहीं है। नॉर्मल तरीके से वहां पर ट्रैफिक चल रहा है। और T1 पर जो ये पूरी तरीके से ऑपरेशन बंद किया गया है उसकी वजह सामने की तस्वीरें आप देख सकते हैं। जो तकरीबन 50 मीटर से ज्यादा का पूरा जो रूफ है वो अचानक से कोलैप्स करता है और जिसकी वजह से जो एहतियातन है वो बाकी हिस्से भी बंद कर दिए जाते हैं और जो लोग यहां थे उनको यहां से हटा दिया जाता है। जी
हिमांशु जी, बहुत बहुत धन्यवाद आपका और जुड़े रहिए हमारे साथ। 2 बजे के बाद आपसे फिर दोबारा जुड़ते हैं, जानने की चेष्टा करेंगे कि T1 ऑपरेशनल है या नहीं। फिलहाल ये पता चला है कि इस हादसे में एक दुखद मौत हुई है और दिल्ली पुलिस पूरा डायल का सेटअप वहाँ से मलबा हटाने का प्रयत्न कर रहा है और कोशिश कर रहा है कि यात्रियों को कम से कम परेशानी का सामना करना पड़े। T2 और T3 जो 2 और टर्मिनल्स हैं वो बिल्कुल ऑपरेशनल हैं। गुड टाइम एज एनी टू वेलकम साक्षी। गुड मॉर्निंग टू यू साक्षी। and what a match it was. Were you awake till 2 a.m. yesterday?
I was awake till about 1 a.m. and therefore I wear a blue dress and you wear a blue tie, and I knew that you are going to be doing that without having asked you to celebrate the victory of India, and we are now going to be cheering for India for the finals as well. So you've got me enthusiastic about the cricket matches that we see. Of course, yesterday's was a good match, and of course it was by the third wicket down on England, I was nearly confident that we are going to be winning this one, and therefore I could have a peaceful sleep. But in the morning, of course, monsoon showers, as they give us respite from the scorching summer, there's waterlogging everywhere, and therefore I got delayed to work. And of course, there were cars that were stalled, there were engines that were failing, so you could see all across. A 45-minute distance in the morning has actually taken me more than 1.5 hours today. So of course that is something that we have to face going forward, but nevertheless it's the pros and the cons of how the monsoons are going to be giving us. But Kiran is with us, so let's get started. Kiran, a lot to look forward to. 24,000, 79,000, 53,000, कुछ भी आप देख लीजिए, हमारे पास अभी आज पॉजिटिव्स हैं बात करने के लिए बाजार में. अब यहाँ से बाजार कहाँ जाएगा ये तो आप ऑलरेडी डिस्कस कर ही रहे हैं लगातार शैल से. आपके हिसाब से अब बाजार में जो नेक्स्ट लेग ऑफ रैली आएगी, वेयर विल द आउट परफॉर्मेंस कम इन, किरण?
So looking at all the setup, and we already discussed multiple times this thing also. Okay, next rally we supposed to expect from the technology shares, pharma sector, and the defensive sector like FMCG. During previous month rally or maybe before that, we have seen that the IT sector remained untouched, and it was trading into the falling trend lines and the falling channel everywhere. But now the slowly and gradually again they are getting, we discussed about Infosys, Wipro multiple times on your shows, and we are seeing since last couple of week it started moving higher pattern. So IT and pharma, both the indices on our radar, and we are expecting some good move coming for next bull run or maybe next rally can be driven by these sectors.
Okay, got that. We'll also keep an eye out on how the US markets, the Asian markets are panning out. What kind of a move can we see today? So overnight, the US markets managed to eke out gains in a rather volatile session of trade tonight. The focus will be on Fed's preferred gauge for inflation, the core PCE price index for May. Remember, the S&P 500 and the Dow edged just about 0.1% higher in the overnight trading session, while the Nasdaq was up by just about 0.3 odd percent. So we'll keep an eye out on how the commentary around inflation really pans out, and therefore the reaction in the US markets. In the Asia Pacific region, we were seeing positive trades early morning. Japan's Nikkei rallied about 0.9%. The Australian equity benchmark index, S&P ASX 200, and all the ordinaires also advanced by about 0.4%. Kospi was up by about 1% as well, whereas the Hang Seng declined by about 0.2%. The Shanghai was up by about 0.5%. So that's how the Asia markets are panning out. As far as the GIFT Nifty is indicating a positive start, and let's hope that stays, because it's a flattish to a positive start that the GIFT Nifty is indicating at 24,100 odd levels. We'll keep an eye out on that one. Let's also look at how the flows were. Remember, the foreign institutional investors have turned out to be net buyers for the month of June, following aggressive net purchases of stocks worth 7,659 crores on Thursday. I think this is the second best figure on a single day that we have seen by the FIIs, or could be the top best figure as well. I'll have to research that though. But domestic institutional investors, however, have net sold shares to the tune of 3,606 crore rupees as of yesterday. So those are some of the brokerage houses that those are some of the reports that we'll have to keep an eye out on. Let's also look at some stocks that I'm keeping an eye out on. So Vedanta, of course, there is a lot of fundraise news that's coming in, so I'll read that all quickly. Remember, Vedanta, the company has raised about 2,500 crores via NCDs. We are also looking at SBI, that bank has raised about 10,000 odd crore rupees via non-convertible long-term bonds. BHEL, the company has secured a 13,300 crore contract to set up a 1,600 megawatt thermal power plant in Jharkhand. And JSW Infra is in focus. JSW Ports will be acquiring 70% stake in logistics service provider Navkar Corp at 95 rupees 0.61 paisa, which has triggered a mandatory open offer for additional 26% stake. We are also looking at India Cements, remember now the news has been confirmed that Radhakrishna Damani and associates entities have actually sold about 22.8% stake via the open market operations. RBL Bank, the lender, has approved a raising of 3,500 crores via QIP, and AU Small Finance Bank is in focus because the lender will raise about 5,000 odd crore rupees via QIP as well. And Yes Bank, the lender, has executed a one-time settlement in its one of its stressed loan exposures. The borrower will now pay $23 million as settlement against its dues too. From the real estate space, Brigade is going to be in focus. The company has launched a 6-tower residential project in Bengaluru with a revenue potential of about 1,100 crore rupees. From railways, I'll keep an eye out on RVNL. The company has incorporated subsidiary of RVNL, a Middle East contracting in Dubai. So we'll keep an eye out on those as well. I do have some brokerage houses. So Morgan Stanley on Avenue Supermart has come out with an overweight call with a target of 51.23, even though they believe competitive intensity in online grocery space is now sharply increasing, with Amazon Fresh also talking about expanding its presence from 60 cities to 130 cities. For the first time, JioMart has overtaken DMart as well. On product discounting, Big Basket is leading DMart too, and they're now looking at faster delivery as an option as well. So this is a space to watch out for. SRF, Jefferies has come out with a report, underperform call and a target price of 21.25. They believe company's specialty chemical segment is facing some headwinds from price erosion and due to Chinese competition and due to negative operating leverage, and therefore we are going to be keeping an eye out on that one. On Reliance Industries, of course, Jefferies has a buy call with a target price of 35.80, the most bullish target thus far that we have. This is after Jio has raised the tariffs by about 13 to 25 odd %, and based this tariff hike and the expectation that even Bharti Airtel would be going for the same, there are also reports coming out on Bharti Airtel which are positive. Jefferies has again said maintaining a buy rating on Bharti with a 17.20 target price now. On the cement space, with the kind of mergers and acquisitions that are taking place, you can actually see Nomura giving an positive rating on the cement space, given the aggressive expansion targets. They believe there could be stronger consolidation going forward of the large peers, and therefore they'll be watching out this space very, very carefully. So those are some of the brokerage houses that I'll keep an eye out on, Shail.
Ladies and gentlemen, we have the opening quotes on the Nifty. It's a green tick, 20 points higher now, 24,064. Reliance Industries is the stock in focus because its unit Reliance Jio has taken the step to augment its tariff plans by a blended 20%. Let's see how the counter is moving. It's a bit of a profit booking, 30 rupees down, 3,025. Let's look at stocks which are taking action. Vodafone Idea taking it away, 7% higher, 1990. Remember, now Vodafone Idea will also raise tariffs, as also will Bharti Airtel. The price of Bharti Airtel will be right there in front of you, 3% higher, 1520. Needless to say, Bharti Airtel is at a record high. What else is clicking? CDSL. There is a stock split in the pipeline now. The company informed shareholders last night its board will meet. The counter at 2139, 6.5% higher. Kims, we will see a stock split in the works here, 5:1. Please keep an eye out on this one. Very strong move coming in on Industars, 3% higher, 376. What else is moving apart from these stocks in news? JSW Infrastructure. Remember, it's purchased Navkar Corp, a 70% stake there for at about 105 rupees 32 paisa per share. JSW Infra is 6% higher, 339. Let's pay more attention to what the large caps are telling us. Let's look at what Infosys is doing. 6 rupees 65 higher, 1580. How about HDFC Bank? In the green, 4 rupees higher, 1700. Let's take a detour into the FNO space and look out for price action. BHEL will be in focus, 3% higher, 306. HCL Tech, a huge block expected today at 1415 rupees per share, which is a 2.5% discount to its price. HCL Tech clicking in the green, 1.7% higher. Okay. What we'll do, ladies and gentlemen, we'll now get back to Kiranji. Kiranji, markets are in fine shape. Last day of November, a bit of profit booking or further advancement. Any share that catches your fancy in this pre-open?
So in pre-open, the stock you have discussed, apart from that, two stock which we are liking, we already discussed about the sector rotation. So from IT emphasis which we are liking, we have you discussed about the Infosys, but if you look at the mid cap IT, we are identifying some of the good stocks are can give a very good move. So Infosys one of them. Yesterday closing, we have seen that prices close above its 100 and 200 days moving average. On intraday price chart, you can see some ascending triangle pattern breakout is also there. So 24.40 was the closing price. We are supposed to go long, and price target which are we expecting in day or two is 25.10, and we want to like keep a stop loss of 2400. So with the stop loss of 2400, emphasis would be a good buy at current market price. Another stock which we are liking, it is from the NBFC space, Canfin Home. If you look at the Canfin Home chart, as classical technical pattern, a flag pattern breakout came yesterday. Another thing that last time 910 level the all peak made on July 2023. So it's almost a 1 year of consolidation has been completed, and it is giving a breakout. The momentum indicator is also in bullish zone, and since like 5-6 days, you look at the volume is dramatically going higher, and higher only. Average volume is higher than previous 20 days average volume. So the price volume breakout is on Canfin Home at current market price, or any dip, anyone can go long. We are suggesting kind of a little bit positional call. We are expecting price target of 950 to 980 in upcoming time, and keep very strict stop loss of 880. So any dips toward 900 would be the great buy. Target would be 950 and stop loss 880.
Fair point. I'd also like to see what India Cements is doing. Just bear with me, ladies and gentlemen. Yesterday, we had a fairly strong show on India Cement for the second day in a row, and the price is right there in front of you, down about 0.5%, 0.1% to 92.80. It's a quiet opening, Sakshi. I don't see anything out of the ordinary that's happening in the market, but two very high beta low ticket items are now clicking very well. BHEL up 3%, Idea Cellular up 3.7%, and of course Industar, this is something that I have been looking at, 2.4% higher, 374. There is quiet on the PSU front, there's quiet on defense, there is a quiet trade happening on railway stocks. Now tell us, what are you watching?
We'll keep an eye out on this one. 1490 right now, 1% higher, but there is news tariff hikes have been increased by Bharti Airtel as well, following Jio's hike as of last night. We are given to understand that first flash that is coming in front of me is that less than 70 paisa a day hike has been done on the entry level plans, and this is effective Wednesday. I am looking at more details to come in, and I will give all those details that are coming in on my wires. But Bharti Airtel is about 1% higher now, and the company has said that their focus is to continue to maintain ARPU above 300 rupees, and therefore even Bharti Hexacom circle rates have been hiked, or tariffs have been hiked at that front as well. So we'll continue to watch out for the entire telecom space today. Reliance on the one hand, Bharti Airtel on the other, Vodafone Idea is likely to follow suit with the news coming in on that front too. So this is going to be clearly the focus of the day. Let's ask Kiranji, within we have the only major listed company is Bharti Airtel. Reliance is a proxy play. Vodafone Idea is finally coming out of its long drawn price erosion, wealth erosion that we have seen, and finally things are looking better for Vodafone Idea. How are you looking at the telecom space? Where would you place your bets? 4% higher now for Bharti Airtel at 1536.
Right. So overall, as you mentioned about, there are only three players which we have to play this telecom sector or a telecom bull run. So Bharti Airtel definitely is going into the height of high bottom since a couple of months, and it is going to hold this particular trend, as we are seeing that large player Reliance is rising the tariff. So Bharti and Vodafone can also follow the same. Looking at chart pattern, Bharti Airtel has already given a breakout from 1450, and from that particular level, if we expect, there are chances prices can touch 1520, 1550 in upcoming time. So any dips towards 1450 would be the buy opportunity. Keep very strict stop loss below 1420 and for the target price of 1520 and 1550. Now, apart from that, Vodafone Idea, it is a retailer choice because it is again a very two-digit stock, and generally retailers like such kind of a stocks. However, if you look at the weekly, monthly, and daily chart, all three time frame, the momentum indicator into the bullish zone, and generally we have seen whenever the prices momentum indicator keep rising in all these three time frames, then we can expect some short, a good amount of trade in short time. So looking at all this pattern, we are expecting a good amount of move should come in by Vodafone Idea. Price-wise, stop loss can be a very small, but the percentage-wise stop loss is quite big. So at current market price or any dips toward 18 rupees, 1850, that again a buy opportunity. Looking at price pattern or a weekly chart or a monthly chart, as of now, the next resistance placed at 22 rupees. Once the 22 rupees cross, then we can expect some further up move also. So as of now, Vodafone Idea is trading above COVID, before COVID high. So 2029 Vodafone Idea was trading at 19 rupees, and now again it is trading at 19 rupees. So it almost 6-7 years of breakout. So there are very good chances we can see some 22, 23 kind of a level. Keep very strict stop loss below 70.
Okay, Kiran. We'll also welcome Mayuresh Joshi now on the show with us, Head of Equity Research at William O'Neill India. Warm good morning to you. Thank you so much, Mayuresh, for taking the time out. So much to discuss today, but we are discussing the telecom space where the news is flowing in from now. So let me begin with that. Almost up to 25% of a hike by Jio, and now, just now, about Bharti Airtel is announcing revised mobile tariffs and a hike of up to 20% for various plans as well. The stock is reacting positively. How are you really looking at the telecom space?
Morning, Sakshi. Morning, Shail sir. So I think positive light. And again, I think the news has become fact now and on expected lines in terms of the 20-25% hike that was expected. So to that extent, it largely will start building into the price as we see built up during the day. But what this really does for players like a Bharti and Jio, Sakshi, is that because they have front-loaded their capex, both in terms of spectrum spends a couple of years back and the 5G infrastructure ecosystem as well, along with very calibrated spends in this round's spectrum auctions as well. The flow will directly be on the EBITDA front, and therefore I think EBITDA expansion is what the street was looking at, along with bottom line growth, is now going to become a reality. So to that extent, deleveraging of balance sheet, specifically in Bharti's case, some expectation in terms of their non-core asset sales, and in fact, even some circle sales in the African region would deleverage the balance sheet even more. So the street should take it positively. I think one actionable on declines might be a stock like Industar, where the expectation now largely is that tenancy ratio should keep on improving. Expectations in terms of both telecom and the industrial part of the business should start inching higher. And when you're probably looking at the revenue per TAR, I think that should also show some element of respite, leading to deleveraging of the balance sheet on Indus as well. It does have built up debt over the last few quarters, and this will certainly help them in terms of a business outlook to reduce debt on its balance sheet and create the operating leverage and return ratios improvements that one looks at. So yeah, I think telecom looks good as a space. Anybody holding Airtel, Jio through Reliance can continue holding. Industar probably on declines might be an action.
Right. Good morning to you, Mayuresh. And Sakshi, there is absolutely no reason for you to find out why the correction will begin. It's right there on our screens. Mayuresh has shaved his goatee, and we are headed for a price dip in the market. Good morning to you, Mayuresh.
Morning, Shail sir. But even after shaving my beard, I think the Nifty is at an all-time high. So
Yes.
So the India growth story continues whether I have my beard or
No,
not.
our pact was, yeah, our pact was that you will keep the goatee and the bull run will continue. Now let us see. As I was mentioning, charts are overstretched. Everybody is making more money than he or she can count, and it is becoming very easy. सुबह कोई भी डिफेंस स्टॉक खरीद लो, अगर उस दिन 10% नहीं बढ़ेगा तो उस हफ्ते में एक बार तो बढ़ ही जाएगा. So that is how we characterize markets today. But a very warm welcome to you. And apart from Telecom, one or two stocks that you are looking at. Very quickly, please. We are just a minute away from the markets to open.
Sure. So I think within the auto space, Gabriel is something that one can look at, getting very, very aggressively into the EV space. What we feel at Markets with India is the earnings growth, price growth, strong institution holding, and expectations of reasonable amount of earnings expectations because of the EV and the existing portfolio should augur well. The other stock from the pharma space will be Natco Pharma, and our take here is again branded generics, branded formulations, very strong EBITDA margins, strong pipeline, and expectations of reasonable earnings growth as well. So I think I'll rest my case here. Paucity of time, Gabriel and Natco Pharma.
Okay, and Mayuresh, I'll come to you on Bama Lorry in a while. Please keep your thoughts collected. That was a stock that you had suggested. We'll come to that, but we'll wait for the markets to click on. Okay, ladies and gentlemen, a green tick on June 28th, which is the last day of June's fantastic cash market. It's also the last day of Sensex's expiry. Keep an eye out on that one. Let's first look at what Reliance is doing. Remember, its unit Reliance Jio raised prices. Okay, it's a blowout. 44 rupees higher, 48 rupees higher, 31.11. What's Bharti Airtel doing? 1% higher, 14.89. What's Vodafone Idea doing? 1.5% higher. And Industar is the indirect beneficiary of it all, 3.8% higher, 379. Let's pay attention to other index heavyweights now that we've treated news as it should have been. 6 rupees higher on HDFC Bank, 1700 is with you on HDFC Bank, ladies and gentlemen. Congratulations. Nifty Infosys, 1.5 rupees higher, it's flat. Within the index heavyweight space of 10 stocks, okay. This is building up. Reliance 2% higher, 61 rupees, 31.20. Lever is in the green, about 1% higher. How about ICICI Bank and Axis Bank? Flat as flat can be. Very quickly, let's look at NSE 500. Then I'll go to Kiranji on RIL. CDSL taking it away, 6.5% higher, 21.37. Long-term shareholders will be rewarded by a stock split whose ratio is yet to be known. JSW Infrastructure, acquirer of Navkar Corp, up 4%, 332. Industar now gaining ground, 4% higher. What else is moving? Punjab National Bank 3% higher, 122. Let's look at the most active list. We'll get a good idea. Polycab, 2 percentage point block deal, 4.5% lower at 66.79. Already 2600 crores worth of transactions done. Okay, top traded and top gainers are Bharti Airtel, Idea, Industar and Reliance. Telecom all the way. Kiranji, coming to you. What should one do on Reliance and what should one do on Bharti?
So first, let's discuss Reliance. Reliance has given a breakout from last 3 months consolidation. So definitely we are expecting price target of 3200. So any dips towards 3080, 3090 would be the buy. At current market price, I would like wait and watch. Keep very strict stop loss of 350 and for the target of 3200. So risk reward ratio is not favorable. Wait for the dip. Whoever is holding this particular stock, they can hold. For new buying, waiting for dip. Coming to the Bharti is also similar fashion, is giving a breakout on daily price chart and it is not sustaining its high also. So let's wait for any dips towards 1450, 1440. That would be the accumulation zone. Keep strict stop loss below 1400 and looking at consolidation pattern breakout, we can expect price target of 1550, 1600 in upcoming time.
The Nifty are again at record levels, new levels at which the markets have it open, and of course telecom space is in focus. Mayuresh ji, what else would you be keeping on your radar apart from telecom in this new leg of run up and up until the budget?
So as I mentioned, I think the themes that will resonate in the budget are going to be related to power, they are going to be related to capex spends, water, waste management as well. Therefore, I think a few companies within this space should be kept on your radar. Obviously, we've not put our notes out so far, but water and waste management companies, I think we did mention one or two. I think Welspun Corp, Jindal Saw, which are also indirect beneficiaries in terms of the Nal Se Jal Yojana, waste management, water management, pipeline outlaying, so on and so forth. We've obviously seen a huge run-up that has happened in BI Tech, within the larger names in this space itself. I think this domain is where my expectation is a large part of capex will also come through, apart from the normalized capex. So I think watch out for this theme within the budget allocated capex spends that the government will probably do.
Okay, got that. A lot of these stocks are buzzing away. Apart from Indus Towers is now up 4%, CDSL is up 8% in trade, BHEL is up 3%, Samhi Hotels is up by 4.5%. Some of the big buzzers that are coming in front of me again, and stocks like Gabriel and Natco Pharma, as Mayuresh has already highlighted. What about Reliance Industries, Mayuresh? How are you looking at it with fresh brokerage reports now coming in, and the stock is now finally participating after some 20-21 months odd? Reliance, how should one be approaching?
I think one of the elephants has started dancing. The other elephant is showing signs in HDFC Bank. So I think the biggest elephant in terms of weightage on the index, Reliance, is expected to do well. So I think both the Reliance retail verticals, you've seen a tariff hike. So I think Jio is going to be a big beneficiary as far margins and cash flow. Reliance Retail should have a steady state earnings growth. You had seen some patchiness in terms of earning delivery, but that should largely normalize. So the two basic tenets of the retail oriented businesses contributing to 50% of EBITDA should. In terms of their pipeline business, the expectation is that the GRM should largely normalize as well. And because Reliance has so many feedstock options available at its behest, that part of the business should do well. Petchem, demand supply dynamics still very, very volatile. But that should start coming up as China shows signs of improvement in the next few quarters. Generally, the trend for petchem should also be relatively better. If you do the sum of parts and the calibrated investments in green energy that they're probably doing, some expectations there in the next few months to come on stream as well. That really augurs well in terms of the overall balance sheet strength and expectations of return ratio. So I remain optimistic on Reliance. And the news now going forward will be how do they demerge their businesses. So I think that might be the next trigger for the stock as well.
Okay, ladies and gentlemen, let's just dip into the broader markets for a while, and then we'll get back to Mayuresh. The broader markets, 1662 stocks in the green, 440 in the red. So 4:1, a very strong move in the broader markets. Let's look at the advanced decline for the Nifty 500. 341 shares in the green versus 158 in the red, so bulls all the way. We track 19 indices for you. Out of 19, 17 are in the green, led by the Pharma Index, 1.2% higher, 19,766. The PSU Banking Index, about 3/4% higher, 1757 for you. Mayuresh, coming to you, and I'm requesting the PCR to fire a long-term chart of Barmer Lorry. As you know, Mayuresh, we keep a very close track of all the wonderful fundamentally strong counters that you suggest, and Barmer Lorry was one of them. There was buzz in the market that Barmer Lorry's management will announce a bonus, but that did not come through, sort of hurting sentiment on this counter. How do you see Barmer Lorry at current prices, given that the broader market has rallied very sharply, but Barmer hasn't participated?
So I think the stock is well poised in terms of earnings growth, Shail sir. And if you probably look at all its business construct entirely, I think travel, what they're probably doing in terms of their capacity expansions, the capex that they're probably putting at JNPT, and the logistic infrastructure growth that Barmer Lorry is expecting internally, as well as a lot of emphasis that will be laid in terms of the logistics space itself in the budget. So I think a lot of emphasis in terms of some key themes, including logistics, as I said, including renewables, including waste and water management, are going to be focal points in our opinion. And therefore, Barmer Lorry can be a big beneficiary. It's not moved that much. I think valuations are still reasonable in my opinion. It gives a solid 2.5% dividend yield as well. And most of the business segments that they are embarking upon, the management actually expects revenue to actually grow at a very, very healthy pace over the next 2 to 3 years. I think there is enough amount of triggers for this stock from an earnings perspective, from a macro tailwind perspective, and obviously because of their balance sheet strength. There is also a safety proviso through the dividend yield, as I said, of 2.5%. that investors can start building in. So yeah, I think it's one good actionable stock within the PSU space.
Okay, fair point. The two stocks that also have been highlighted by Mayuresh now enter in our valued purchases zone. Natco Pharma 1.6% higher, 1169. Remember, this mid-cap pharma stock is consolidating near its all-time record levels, last seen 5-7 years ago. So if the breakout happens above 1200, that will be a big one. And of course, Gabriel, shocker maker earlier for two-wheelers, a percent down at 472. And the sunroof that you see in your high-end luxury cars that Mayuresh, Kiranji and Sakshi drive is made by Gabriel. It's one of the OEM suppliers for that lovely product. And how can we forget Bhikaji Foods when Mayuresh is with us? 0.5% higher, 723.8. Sakshi, what are you watching?
First up, Shail, when it comes to high-end cars, it has to be you first and then all of us in the numbers and names that you have taken, because I clearly remember you showing me off your latest Thar and how you have got it completely remodified, and it had to take at least 10 days to modify the way you had to. So I'm sure, Mayuresh and Kiranji are not aware of your passion for cars. I'm not sure if they are, and I'm sure they will also love to, love for you to drive them around in your latest Thar. And I also have to take that ride, which you haven't given me up until now. So we will be taking that from you for sure, beyond the live shows that we're doing. But let's come back to the markets for now. Several of large trades are actually taking place right now. Polycab, there's a 2.99% equity that has exchanged hands. Adani Ports also, there's a large trade that's happening. About 71.35 lakh shares have exchanged hands as well, of about 1,048 odd crore rupees. Let's ask Mayuresh, how is he really looking at these big block deals, promoter exits right now that is happening? And is there a message for retail investors at large?
So I think it's the intent behind the promoter exit, right, Sakshi? Obviously, I think if it is a nominal stake sale, that is probably happening. And it is obviously, I think promoters also need to have a little bit of their needs fulfilled, right? So I think if it is reasonable enough, if it is valid enough, I think the street should take it. At this juncture, I think liquidity is so strong from the institution side, from the retail side, that even these stake sales are probably getting lapped up. But I think it's the basic tenet, the reasoning and the logic behind what is happening and the quantum of the stake sale as well. So I think if it's very, very negligible compared to the overall stake that the promoter probably has, I think that should be well accepted because of the liquidity in the market. And again, I think the standing of the company itself, what is the company expected to deliver in the space that it operates out of. So I think these two tenets are actually working in the bull market right now. So even the promoter stake sales are no concern.
Right. So those are the big block deals and the overview on some such spaces. About the cement space, Mayuresh, how are you looking at the consolidation that is underway? And after yesterday's Big Bang news on Ultratech India Cements, how are you looking at this space? Because this could be just the beginning of more consolidation that will take place.
Yeah, so two things happening here. One, I think in terms of fresh capacities that are expected to get added, it is not going to be incrementally exceeding the demand for cement that can be expected over the next few quarters. So to that extent, I think demand to clinker grinder ratio is going to be positively impacting cement companies. The second element, as you rightly pointed out, Sakshi, is the consolidation phase. So there are a lot of companies, as I mentioned in my earlier interaction, between this 3 to 4 million tons and 8 to 10 million tons, which can be acquisition targets. Because typically 4 to 5 million ton companies do not have pricing. They probably do not have the financial muscle to expand quite significantly. And therefore, I think larger players can actually gobble these players up, leading to further consolidation. And what this really does for the industry is a lot of the leadership companies have a nationwide presence, expand their reach in terms of distribution and plants even more. Obviously, pricing is expected to be stable and remain on the higher side. Because of the infra spends that one expects on manufacturing, roads, railways, highways, housing, rural, urban, so on and so forth. The expectations in terms of utilization levels actually exceeding 75, 78%. will automatically create an operating leverage and reflect positively in terms of absolute EBITDA and absolute EBITDA per reported absolute EBITDA per ton. And therefore, I think it's a good space to be in. Obviously, replacement costs are fair enough at this juncture, but we continue holding, as a clear disclaimer, leadership stocks like Ultratech in our global portfolios. And we do have stocks like JK Cement on our watch list.
Right. What we'll do now is take a detour into the market before we let Mayuresh go after one final question. Record highs today on an unusual set of stocks which generally we don't mark. GE Shipping 3.7% higher, 1237. Kalyan Jewelers 7% higher, 509. Wealth, Financial Wealth Manager 361, 12% higher, 1050. And of course, JSW Steel 948, a sixth of a percent higher as far as markets are concerned. Mayuresh, before we let you go, two stocks that you are looking forward to before the budget announcements become public.
As I said, within the infra theme, it's going to be quite significant in terms of infra spend. And therefore, I think the capital spend of 9.5 trillion could expand to 11.5 trillion. So I think a couple of stocks that I mentioned earlier as well. One bunch, Welspun Corp, Jindal Saw, keep that on your radar, because I think that is one proof of stocks that can do exceptionally well in terms of capex announcements. One obviously is a proxy in terms of Pennar Industries, which I have discussed a couple of weeks back. Our take is that pre-engineered buildings, where it has a huge expertise, strong balance sheet, that stock should do well. And again, waste and water management, I think this is one theme that I'm probably looking at very, very closely. You do have a bunch of stocks here as well. So I think apart from VA Tech Babak, I think you have a couple of names, small cap names. So for compliance reasons, I might not be able to speak about that. But VA Tech Babak is something on pullbacks that you should probably look at. Generally, this theme is where I think a decent amount of allocation can probably start.
Right. Thank you, Mayuresh. And as always, it's a pleasure to host you. I'm sure positive sense will prevail and markets will overlook this small, how should I say, totka on your part, which you've sort of done away with, the goatee. It'll come back. ये तो अपनी खेती है. जब grow करनी है तब कर लो. जब नहीं करनी तब जिलेट की तरफ देख लो. With that, thank you so much for your time and have a nice weekend. I hope you watched the match last night, and I hope that you'll be watching the match on June 29th. The Men in Blue will just bring the cup back.
Absolutely, I think. Thank you so much, sir. And yes, I did watch the match. I slept at 2:30 in the night. But yes, we will be on the topic. Jai Hind, Bharat Mata Ki Jai. Thank you, sir.
With that, ladies and gentlemen, we are at 9:32. Let's get Kiranji into the discussion. Kiranji, first 15 minutes are with us. 24,136 is the high. I believe 120 is a supply zone which has been taken out, and the low is 24,064. What on the Nifty now? We are on the first day of July's fantastic F&O expiry that has started. Reliance at a record high, Bharti at a record high, lots of metal stocks working in favor of the index. Where do you see it intraday?
So looking at the last 15 minutes chart pattern, definitely it is a high bottom pattern only. And the way momentum indicator is behaving and the way open interest is behaving, we sort of a sense that should not chase at current market price and wait for the dip, honestly speaking. So 24,100, we are seeing call writers is putting efforts and the open interest is getting rising. So there are chances we can see some supply zone toward from 24,100 to 150. So that will be the supply zone for today. And lower side 24,000 going to be a very good support. So at current market price, we are not expecting to go long. Any dips toward 24,000 would be the opportunity. Keep strict stop loss below 24,000, and we can expect again market should touch 24,000, 150, 200 in later part of today. So as of now at current market price, we are not expecting to go long. But on contrary, you can check out the Bank Nifty. Bank Nifty is taking support at 52,800, 52,700. So there are chances we can get some opportunity to go long on Bank Nifty. The strict support or the strict stop loss would be 52,500, and any dips toward 52,700 would be the buy. So Bank Nifty go long around 52,700, keep very strict stop loss of 52,500.
Okay, got that. Kiranji, apart from this, I also wanted to discuss the entire PSU space with you, because the PSU index is again on a roar, 1.4% higher for the Nifty PSU index, and it's the metals, the power space, oil and gas, all of them really rallying in trade. So Steel Authority of India is another 4% higher. BHEL, of course, it has a news flow of big order, 3% higher for this one. NTPC, Oil India, ONGC, NMDC, Coal India. You also have Indian Oil Corporation, GAIL. The entire space seems to be abuzz with action. Steel Authority is also now the top mover within the F&O space. How are you looking at a fresh move within the PSUs, and where would you concentrate your attention?
So looking at PSU, in PSU also we are seeing some good amount of movies going on in three sectors. One is metal, another is power sector, and third one is the defense one. So as of now in defense we don't want to touch, but on the metal side we would like to go long. So private and PSU, both metal sectors, we are expecting some good amount of upmove should come. So Steel Authority of India would be the preferred choice. Reason being, it has given a reversal candlestick pattern on 100 days moving average, and the follow-up buying is coming today. So at current market price or any dips towards 140 would be the opportunity to enter. Keep very strict stop loss of 135, and we can expect some price target of 160, 165 in upcoming times. One more metal sector, metal stock I want to highlight, but it is from the private sector. It is JSW Steel. If you look at the JSW Steel, it has giving a breakout from ascending triangle pattern. Risk reward ratio is very much favorable. So at current market price 945, anyone can go long. Keep strict stop loss of 915, 920, and we can expect target of 4-digit very fast. And the last stock which we are liking from PSU stock, which is into the power sector, which is Coal India. Coal India is also taking a cluster support of moving average, trading at 470, can go long at current market price with a stop loss of 460 for the target of 5.
Okay, got that. Let's also discuss.
Okay, ladies and gentlemen, what
yes,
we'll
Shail
do
is back. Okay.
Yeah, please continue, Sakshi. It's okay. Continue.
Okay, so apart from this, I wanted to discuss with you Dr. Reddy's, which is buzzing again, Kiran, and what do you spot here? Is this a momentum that one should be really looking at chasing? The pharma space is relatively doing better after a many days. The index is also up by about 1.5%.
Yeah. So again, I just wanted to highlight that in the opening commentary, we said that market is going into the next bull run, and in this bull run, we can expect some good amount of up move should come from the pharma and the IT sector. So Dr. Reddy in pharma, definitely anyone can chase this momentum. Reason being, the falling trend line breakout is there, and since last 2 days, we are seeing prices taken a support from his long-term moving averages, and again back into the higher top, higher bottom pattern. But apart from Dr. Reddy, which stock which we are liking and risk reward ratio is favorable, that is Sun Pharma. Sun Pharma is just about its long-term moving averages, trading above its last 6-7 days highs. So and one rectangle pattern is also getting breakout. One falling trend line is also getting breakout. So Sun Pharma can be the good pick because the risk reward ratio is very much favorable at current market price. So 1530, 1525 price is going on. One can go long. Keep strict stop loss below 1500. We can expect price target of 1600 very shortly. So Sun Pharma would be the preferred choice from pharma.
Okay, Sakshi, what we'll do is we'll just take a detour into the markets. Lots of strong moves coming into index heavyweights, led by pharma. Of course, we've just discussed Sun, but Dr. Reddy's 2.3% higher at 6384. Remember, there was a transaction worth $500 million just 2 days ago on Dr. Reddy's. So the momentum continues. Strong moves on Tata Motors, 1.4% higher, 986. I'd also at the same point of time like to mark Hindustan Unilever. This is a rare stock that we mark. 24 rupees higher, 2486. Kiranji, coming to you, what are the charts of Hindustan Unilever telling you? This is something that we don't discuss often, but maybe at record levels, some part of the money which is getting booked out of a lot of profit is moving into FMCG. Your view on HLL, sir?
So as you mentioned, Hindustan Unilever we generally don't discuss, but we discussed very well at a good price, somewhere around 2300. And you mentioned in your diary also, I believe it has to be there. So Hindustan Unilever we discussed at 2300. From that level, we have seen a very good rally. From that level, it corrected, but again taken a support from 200 days moving average, and we expect a good amount of rally should come in Hindustan Unilever. Even entire FMCG sector can perform in this last leg of bull run, we can say probably. So at current market price, anyone can go long on Hindustan Unilever, keep strict stop loss of 2400, and we can expect the price should touch 2700 again. And with Hindustan Unilever, we discussed two more stocks. One is Bata and another is Kotak Bank. So all three stocks are doing good. I hope that viewer made some good money.
Yes, I believe we spoke about Bata maybe 10-15 days ago when you were with us, Kiranji. And yes, that's a very well performing stock. Unfortunately, over the last maybe 2-3 years, it's not gone up to its performance. I remember an all-time high of about 2100 rupees, and in this roaring bull market, Bata is quiet at about 1460. Sakshi, Indus Towers 384. Usually I don't stick my neck out, but for the last 3 days I have been talking about Indus Towers, record high, and very, very strong block deals now happening in front of us, 1.97 crores. In fact, there's so many that it's better to look at the overall turnover. There's one single block deal of 11.57 crores shares on Indus Towers for 383 rupees. Let me just gauge the total volume. Kiranji, what are Indus Towers charts telling you now?
The stock price is trading with a high top high bottom pattern since long time, but we have seen some consolidation from April 2024 till now, and now that consolidation pattern is getting broken out. So there are chances this pattern can help us to reach at 430, 450 levels at current market price, or any dips toward 365, 370 would be the accumulation zone. Keep strict stop loss below 350 and for the target price of 430, 450. So this stock is particularly in news, so keep very strict stop loss, and going to be a very high beta stock. So the strict stop loss of 350, anyone can go long for the target of 430, 450 in upcoming time.
Okay, and Sakshi, as you've narrated your early morning travel woes, there is coming news from all parts of Delhi that there is intense waterlogging. Ladies and gentlemen, you'll be safest at home. That's the simplest advice that we can give you. Don't venture out. There are traffic jams galore across Delhi, and it'll just add to your strain and to the strain on the infrastructure. Just stay at home if you can, but here's a heads up. Traffic jams all across Delhi, and extreme waterlogging, especially in South Delhi, Sakshi.
Absolutely. Also, right in front of our office itself, Shail, the entire space which is for parking is also submerged at least till knees level, and you know, there is again a risk of all these trees also falling, which has also happened many a times over in the past as well. So we hope everybody stays safe on that account, and like the advice that Shail has given, I hope everybody follows that to stay home and stay safe. PSU banks are taking a flight, 1.7% higher for this index now. PNB is up by over 4%, leading from the front. Canara Bank, Central Bank of India, UCO Bank, Bank of India, no stopping. The entire sector is abuzz with action. Some bit of break and the entire sector is back with momentum. Kiranji, where are you keeping your focus now?
So in PSU Bank, looking at current market price, there are multiple stocks trading into their previous support level. But if you comparing PSU Bank versus private banks is far better. But still looking to the previous this PSU Bank only, Canara Bank one can look into at current market price. Reason being into the long consolidation pattern. Now prices started giving high bottom pattern. Secondly, the stock prices has a very good support of its 100 days moving average, and now it is trading into the high bottom pattern. So one can go long on Canara Bank at current market price, keep very strict stop loss of 114, and we can expect price target of 130. So Canara Bank looks good at current market price.
Okay, Canara Bank at the current market price. Let's see what else is buzzing. Let's go across to see what's buzzing within the broader markets. A lot of stocks here. Bombay Burma Trading Company is sharply higher in trade today, 10.8% higher. You have Solara Active Pharma Services about 10% higher. Burnpur Cement, again, it continues within that cement space. 361 WAM. This stock has been continuously rallying for the last many days, about 8.9% higher even today. Then you have CDSL, we have highlighted that. Man Industries is up by 7%. That's another one that's been doing very well. Voltamp Transformers is up by about 6.5%. Kalyan Jewelers is up by another 6%. We have IndSwift Laboratories that's making a sharp comeback, 6.5% higher in trade. A lot of these varied miscellaneous sectors and throwing in some names that we rarely discuss. Anything that catches your attention within the names I talked about, or maybe anything else you spotted, Kiranji?
Indian Shift Lab, right?
Yeah.
So I'm not able to pull the chart.
Okay. Could you share with us your views on CDSL in the meanwhile? 7.2% higher. It's been doing a very strong run up today.
Yes, so looking at CDSL chart, the way its prices is moving with the gap up, and the stock price has some news also, some rumors is going on. So we are not supposed to comment on that. But looking at the daily price chart, stock was into the consolidation pattern. Today we have seen some gap up opening and a breakout. The momentum indicator is getting back into the bullish zone, and looking at the till now volume is very much higher. So this price can sustain definitely, but any dips should, if any dips comes towards 2100, one can go long at current market price, keep stop loss below 2100, and we can expect price target of 2200 to 2220 in upcoming time. So definitely CDSL is at very good level, one can go.
Okay, there is a further surge in the markets. The Nifty has crossed that 24,150 mark also. A sharp rally that can be seen across the board. Okay, there is a new IPO also that is going to be making a debut today, Stanley Lifestyles. And I'll just mention in the pre-open, the stock has settled at 499 rupees per share. This is as against the issue price of 369 rupees per share as well. The management was also with us to talk about the vision going forward from here, and it looks like it is going to be a 35% premium listing for this company as well after the strong IPO subscription figures that we had seen on this one. So we'll keep an eye out on this too. Anything else, Shail, that you're looking at?
Sakshi, at 9:46, my eyes are glued to two stocks. State Bank of India, 2.5% higher in futures, 864, and giving company to Hindustan Unilever are two stocks. Dabur futures are 1.3% higher at 60835, and ITC 1.25% higher at 429.85. The reason why I mark ITC is twofold. This is the price at which this is the price range in which BAT partially exited and sold its stake to a lot of Indian mutual funds. Because lever has started to move, because there is an uptick in FMCG, this is a stock that has actually underperformed the Nifty for a very, very long while. Kiranji, what are the medium term charts of ITC telling you?
So looking at ITC chart, it is again into the consolidation zone after a very big and long run up height of high bottom pattern. Prices broke down is 200 days and 100 days moving average, and now again prices started moving into the height of high bottom pattern and trying to go above its 20 and 50 days moving average. So at current market price, we can see some reversal pattern has been formed. So definitely can go long at current market price, keep stop loss below 450, and there are chances we can see upswing of 450.45 in short time. So short term target is 450, go long at current market price, a stop loss would be 415.
Fair point. And Sakshi, I think it's the PSU day all over. While gains are muted, but it's a wide variety of PSUs which are now trading at intraday highs. Remember, today is also the last day of June's cash markets, and it's also a day when a lot of NAV action will be seen by mutual funds. Let's look at the usual suspects. PNB 5.5% higher, 125.60. Remember, this was the original high beta of the PSU banking sector. IRCTC 1.8% higher, 1009 is what I see. And Sakshi, a lot of stocks doing good. GNFC retaining its mojo, 4.5% higher, 702. SAIL, NHPC, Oil India, NLC India, BHEL. When you look at the names that I am taking, I am purposely marking different PSU sectors in which their leaders are gaining about 2.5, 3%. So it's an across the board rise. Let me just see if I can mark the Nifty PSE index. Okay, the Nifty PSE index, the Central Public Sector Enterprises Index, is up 1.6%, 1.4% at 10,771. Kiranji, your view on PNB and your favorite PSU stock?
So first, let's discuss PNB Bank. Looking at PNB, the stock price trading into this short-term moving averages. But today, the way it's trading into the height of our bottom, there are very good chances we can see some up move. But PNB conditional buy, if stock price sustain above 127, today the price is trading at 125. So once the price crosses 127, then only we are suggesting to go long. But if anyone is holding this particular stock, they can hold with the strict stop loss of 118 rupees. If 118 is breakdown, then request to exit from the stock, then we can expect some price or a profit booking also. So as of now, new fresh buying above 127 only. The strict stop loss is 128. Coming to the favorite PSU bank, which we already discussed, Canara Bank. So I would like to re-rate Canara Bank again at current market price. Can go long. Keep very strict stop loss below 114, 115. We can expect price target of 130. We discussed this stock at 119. They already moved 2 rupees. Now it's 121. So definitely Canara Bank can go long.
Okay, got that. Well, Reliance Industries, let's keep an eye out on that one again. It's changed a digit, 3100 now for Reliance Industries in front of you. 1.5% move that we are seeing on this leader and big boy of the market. And again, Kiranji, your sense on Reliance Industries and where do you see the stock headed? More importantly, can one take a dip right now?
So Reliance Industries, since morning we are discussing, if dips come, then definitely one can go long. So we have seen that prices has made a high of 32.26, and from that level 3100 is trading at current market price. So again, we just want to wait for some more dip. The price is somewhere around 3080, 3050 would be the accumulation zone. So fresh buying we are not supposed to take at current market price. Any dips toward at least 380, one should wait. Keep strict stop loss below 340, and we are expecting price target of 3200 very well in short time only. So definitely on any dips, Reliance can go long.
Okay, got that. So that's the Reliance Industries counter and how it's heading very strongly. There's a broad-based buying now taking place within the markets, barring just the private banks and the autos that are slightly lower or marginally lower. Rest of the sectors are all doing very well in trade, of course, led by PSU banks, which is now rallying sharply, 2.6% higher for the PSU banking index. This is led by, of course, PNB and the rest of the counters that we have discussed. State Bank of India is now up by 2%. It's contributing to the Nifty gains too. Let's also see some other stocks. Yes, now Central Bank of India is up over 4%. Punjab and Sindh Bank up over 3%. UCO, Indian Overseas, Bank of India, all coming back into flavor after consolidating for a long haul again. Oil and gas stocks 1.5% higher. Both upstream and downstream companies are doing very well. Pharma space is up and about 1% higher, led by Dr. Reddy's. You have the small caps also that are rallying over 1%. They're doing better than the benchmarks at this point in time. Let's look at some of the small cap stocks right there. So CDSL is leading the move, 8.5% higher amid that stock split news. Gujarat Narmada Valley Fertilizers is up by 5%. JB Chemicals in Pharma is up by 4.3%. GE Shipping is back in focus. So shipping stocks also doing well. You have MCX that's also doing well. Let's take a view on MCX from Kiranji. Kiranji, among the top movers within the FNO space also, MCX, how are you looking at this one?
So all the platform stocks are moving. We have already discussed CDSL, now again MCX. Looking at sorry, looking at daily price chart. Again, this stop loss was into the consolidation zone and now getting back into the high top high bottom pattern. We have seen last 10 days consolidation or a rectangle pattern is getting breaking out. So at current market price, trading at 4,000 definitely can go long. Keep strict stop loss below 39.50, and for short term we can expect price target of 4,200 in some time. So definitely MCX can go long with the stop loss of 3,900.
Okay, got that. That's a view coming in on MCX now. The tire space seems to be a buzz with action. JK Tire is up by 5% odd. Apollo Tires also a bit action can be seen on this one. Are you looking at the tire space interestingly, Kiranji, at this point in time?
So looking at tire, the way the auto sector is moving, definitely tire generally moves a very last day. The two stock which we are, the ones out of two stock which we are liking, that is a C8 tire. Looking at current market price, the stock price trading into the high top high bottom pattern. Stock price is giving a breakout from the ascending triangle pattern. The stock price is trading into the 100 days moving average also. So definitely one can go long on C8 tire at current market price. We can expect price target of say for example 2700, 60, 2800 in short time. So see, it looks very good at current market price. Keep strict stop loss of 2580 and can go long.
$9.55, ladies and gentlemen. I think it's a PSU day led by the banking sector. Let's mark the Nifty PSU banking index. Now this is the top gainer. It's up 2.6%, 74.89, and out of 12 stocks that make up the index, 11 are in the green. Across the board, you have stocks like SBI moving 3%, Indian Overseas Bank doing a pretty fine job at 66.20, Canara Bank 3.7% higher at about 120. So it's the earlier market darlings that are coming back in focus. And how? Let's look at the top gainer. We've discussed PNB. Central Bank 3.3% higher, 64.10. Indian Overseas Bank 2.9% higher. Then you have Indian Bank 2.25% higher. Let's look at the volume buzzers. Okay, again we'll mark PNB for one reason, that at 9:56, which is about 36 minutes into trade, already 1.4 times the 5-day average is traded, which is about 5 crore 73 lakh shares. It's a volume of roughly 600 crores, so keep that in mind. And this is moving after a very, very long while. So with that background, let's keep in mind the PSU banking sector. Canara Bank, Kiranji, old world favorite, now back in action after a 5:1 stock split at 121. This makes it at about 610. What are the charts of Canara Bank telling you, sir?
So Canara Bank, definitely a big consolidation pattern is getting breakout. As you mentioned that after split, the stock was into the consolidation and now it's getting back into its previous bull run. So definitely we can expect a good amount of rally should come. But as of now, we are expecting first target is 130. Once 130 is crossed, then we can expect some big targets also. So as of now, one can go long, keep a very strict stop loss of 150, 114. Immediate level 130. Once 130 cross, then we can expect 150 kind of a level also. So definitely it's our favorite stock.
Fair point. 958. Let's look at the IT index. A bit of a profit booking happening here. 25 points lower, 36,100. Sakshi, tire stocks. Apollo Tires days high, 524. at the cash markets. And of course, this rally is led by Maruti. Remember, Maruti, the in FNO of June, it was a major loser, down 4%. Very quickly coming to you, Kiranji, your view on Apollo Tyres and Maruti.
So as we discuss about the tire stock C8 tire, looking at Apollo tire, it's also trading into the height of high bottom pattern. At current market price, if anyone want to go long, they can go long. Keep strict stop loss of 500, and we can expect price target of 550 very in short time only. So definitely Apollo tire can go long. Now coming to the Maruti, Maruti was into the consolidation zone. Now at current market price, we are seeing that it has given a breakout, a breakdown also. Now prices is taking support of its 100 days moving average. So one can, we believe that one should avoid this particular stock until and unless the price is crossing back above 12,300 level. So conditional buy about 12,300 level. If that price cross, then we can expect Maruti to get back into the bullish zone. Otherwise, we can expect some profit booking should go there. So buying above only 12,300. If anyone holding this particular stock, keep very strict stop loss of 11,800. So 11,800 to 12,300 is the range. Maruti can consolidate. Fresh buying only about 12,300.
Okay. Kiranji, quickly, India Cements, 6% higher again in the FNO space. Your sense, can one still take a dip or is it overstretched?
So in India cement it is the overstretch, but overall cement sector can perform very well. No doubt, their monsoon is there, and generally we have seen in during the monsoon cement prices should fall. But looking at current market price or current setup, we can expect some rally at least. So in cement sector, we are liking a mid cap stock which is Sagar Cement. We discussed on election day when prices were trading at 220, 210 level. From that level, it made a high of 280. Now it's 250. One can go still long on Sagar Cement at current market price. Keep strict stop loss below 240, and we can expect price target of 300 in some time. So definitely Sagar Cement can be hold.
With that, ladies and gentlemen, let's focus in the broader markets. The Nifty in fine shape, 24,137, 92 points higher. The Nifty 500 is actually gaining more than the Nifty, so you can well imagine that the broader markets are doing better than the main index, up almost 0.5% at 22,644. What we'll do is we'll pause for a bit and now start looking at how the markets have been doing for the long term. Kiranji, thank you so much for your time, and it was lovely listening to you as far as PSU banks are concerned, Hindustan Unilever, ITC, and of course your very well considered view on Reliance Industries. Thank you so much for your time, sir. Now for a very nice discussion on where the markets are headed, ladies and gentlemen, at these record highs. Where should you be putting in money? How should capital allocation work? We'll be joined by Devina Mehra, founder and CMD at First Global. She's a very well-known stock picker, runs an amazing PMS at First Global, and is one of the finest exponents of long-term capital appreciation as also wealth creation. Namaste Devina ji, what a pleasure to host you. It's buoyancy all around, difficult to find a pain point in the market, record highs everywhere, and from the smile that you light up our screen with, I can imagine that all unit holders of First Global's PMS are very happy people. Welcome and good morning.
Namaste, Shail. Good to be here. And yes, I mean, I have probably been a little more cautious than most other voices, but the market really has blown out the lights. I mean, June alone, depending on which index you look at, it's between 5.5% to 7% up, which is amazing in a little less than a month. So that's been quite spectacular. But as I have been saying in my interviews, even prior to the election, actually from March onwards, we had been hedged. So we did have some apprehensions that there could be an interim correction, which did happen to some extent in March, some extent, after the elections, but that was very, very short-lived. So you can say that we bought insurance, but just as in health insurance, you don't say that insurance was a waste just because you were not hospitalized that year. It's something like that here. But as I had also repeatedly said, we did not make a cash call. We did not go into cash. So we were always fully invested, but we were hedged. We are still partly hedged because the market has, as I said, gone up very, very fast. So that's where we are. And it's been a good place because most times, unless you are anticipating almost for sure that a crash is coming, it makes sense to remain invested and you can always hedge. The parts which you can't hedge are the small cap, micro cap, because there neither does buying a Nifty put work as a hedge, nor can you really have proper stop losses because when those stocks fall, they go so fast, there is no exit. So in our PMS, for example, for stocks below 5,000 crore market cap, we normally have something like 14-15% of our portfolios there. We've gone as high as 20, but currently we are only at about 7% or so. So we know we are being very conservative, giving up on some of the momentum side, but we always err on the side of risk management and caution.
Absolutely. Devina, before we take this discussion forward, let's look at the 1 year rolling return. The Sensex is up 25% over a 1 year basis. The two PMS schemes that you manage, what are the returns on a 1 year basis in both of them?
I'll have to check the exact number. At the financial year end, I remember we were at close to 40%, about 39%. This month alone, we've got, along with the index itself, we are up, I think, 5.5-6%. So I'll have to check exactly where we are on a 1 year basis. In any case, SEBI doesn't allow you to talk the exact numbers till the month is done and all the charges or expenses are put. So that's normally 10 days after the month is over that you can talk the exact numbers.
No issue. I have a fair idea of your outperformance and I'm sure it continues. Now talking about risk and hedge, one of those lovely things that markets have taught us is that the correction does not send a telegram or does not send a mail ahead in advance, and it happens when you wake up next day morning, markets are already down 4-5%. So hedges work, risk works, and that is what fund managers and wealth creators such as yours are actually paid for. Now let's look a little ahead. It's become very easy to make money in the morning or late afternoon at 3:15 p.m. Pick up any defense stock and wait for 2-3 days. 10-12-15% ban jata hai, and it is a affliction that is across the market. Now tell us, one, what is driving it, and when will this party come to a halt?
So it's always difficult to say what is driving it because I think we just look for stories to fit what is happening. So there's a good book called Everything is Obvious Once You Know the Answer. So the very same set of circumstances in hindsight can be used to justify a rise in the market or a fall in the market. So, that's all. It goes up till it goes up. And the only thing, of course, what gives me a little bit of comfort, not on a 1 to 3 month basis necessarily, but on a longer term basis, is that the market is still not, if you look at returns, while that 1 year return is very good and all that, if you look at longer term, we are not at a great highs. And this is the data I think I would have given earlier also on your channel, that if you look at that whole decade from 2010 to 20, if you had put in 100 rupees, it would have become only 230 rupees, barely higher than fixed deposit returns. And contrast that with 1980, if you had put in 100 rupees, you would have 700 rupees at the end of the year. So that whole decade of underperformance at 2010 to 20 is what is allowing this bull market to run. And as I said, you are still not at the trend line. The real risk is when you are far above the trend line. So that we are not there yet. So that's why on a 1 to 3 year basis, I am not. I don't see great risks. But I mean, there, as I said, there are frothy areas of the market. There's small cap, micro cap. There are all these things where stories are being built up. Even when you look at somebody getting an order, you go to the past and you will see that every project has a time overrun, a cost overrun. Many times it's a winner's curse that somebody who gets a big order actually ends up in a mess. So I think some of these things are becoming a bit too much of storytelling and hyping, and whenever in whichever area of the market, as you said, their money making looks so easy that anybody can do it. That's where the dangers are.
Absolutely. And these are the time, ladies and gentlemen, when you have to be extremely cautious. When all stories work out, that's the time to pause. That's the time to reflect. That's the time to build a hedge, even if you're not moving into cash in your portfolio. Devina ji, upon us is the national event that the entire market waits for with bated breath, which is the national budget. Now, wear your thinking hat and tell us what and where is the government likely to act upon which might benefit capital markets, and 1 or 2 points where you think the government will take away something.
I don't know what the government or the finance minister will do. I mean, that would be purely speculative. And the budget, I think we make it into a bigger event than it should be. But in terms of where I think the government's priorities should be, probably, the audience for this talk will not be very happy to hear that because very little directly to do with the markets. But I think the priorities should be health, education, and employment. These are the 3 areas where the government really needs to focus, and actually health and nutrition, also an education, all these things also eventually translate into having a workforce which is employable and can be employed, and therefore as a second order it drives consumption, it drives company profits, it drives the economy. But in the short term, for the market people, they call it populist, they call it freebie, they call it giveaways. But ultimately, those are the things that are required for the long-term health of the economy, even the long-term health of corporate India and the market. So, and this has been a tough thing because the pandemic has even derailed education, a lot of things like that. So, and employment, we are in pretty not in a good territory at all. So we have the young workforce, but we're not able to find jobs. So those should be the priorities to my mind.
Yes, absolutely, Devina. And this is just an aside, nothing to do with markets. I think those people who have absolutely full stomachs and bulging bank accounts are often the ones who crib the most when the government takes care of people below poverty line, offers education, quality education to a vast majority of the not so fortunate people in India, and of course feeds people. Be that as it may, we have to live with that thought process as well.
Shall, just to add to that, I read this book
Please
by
continue.
Rama Vijayapurkar on called Lilliput Land, and that had data
Yes.
on incomes which was very eye-opening, that the bottom 60% of India, it is not just an increase in inequality, their incomes have actually gone down and have been going down from 2016. And also the bottom 60% of India has no surplus, meaning income minus routine expenditure is 0 to negative, let alone one-time expenditure like marriage or some medical expense. So this is the situation, and which is why even in terms of the economy, you see the consumption growth is very low. So GDP growth has primarily been driven by
Yes.
government expenditure. So we need to get consumption up, which means, as I said, employment up and things like that.
That's a fair point to make, and once you improve the social indicators of any country at the BPL level, the economic indicators automatically take an upturn maybe after 6 months to a year, and perhaps that is a message that's percolated very well in the national elections that were just held. Now, Devina, wear your thinking hat. Tell us where the markets are going to be. Tell us where you still find value, and tell us the crores of rupees that are coming in the first global PMS, where are you deploying them?
Okay, so of course, our allocation remains the same, no matter whether you joined 3 years ago or you're joining today. And right now we remain overweight on capital goods and industrial machinery. We've been overweight nearly 3 years from October 21 on that sector. Last year and a half, we have been overweight auto components, pharma, bits of construction. So that those also we remain overweight. But I mean, we are watching. We don't know that how much of those stories have already played out and how much is left. So we are watching for a turn. The sector we are watching for a different turn is IT. That sometime this year, I think it will bottom out. In fact, this month also it has done better than the index. The Nifty, if you look at the IT index, has done better than that. So that's probably close to bottoming out. Banks, while we don't intend to be overweight, we are still underweight. But I think the long period of grave underperformance may well be over, and maybe it will be a market performance sector. We remain a little more skewed towards PSU banks than private sector banks. So that would primarily be, but we are quite diversified. So even when we like a sector, we'll never put 40% of the portfolios in that or anything like that. So we do have allocations to a wide variety of sectors.
Fair point. So PSU banks, let's discuss them. I think it was a great 30-month period on PSU banks, especially the top 5, and people made tons of money. When you look at very robust balance sheets, net NPAs and GNPAs at multi-year lows, credit growth in strong teens percentage point, and of course stock prices doing phenomenally well. Is this the peak of the party?
I mean, as I said, in terms of the stock market performance, the PSU banks obviously have done well. The private sector banks not so well. And if you look at a 4-year picture, 2020, 21, 22, 23, 2022 is only 1 year when the bank Nifty outperformed the Nifty. So that tells you something that what the reality of the sector is. But yes, I mean, I have concerns on credit quality. I saw data which I haven't quite verified that while debt as a percentage of GDP or something may not look so skewed, but if you look at the debt servicing as a part of household income, that's at a very significant high. I saw data which said that it is as high as it was in the US before the 2008-9 crisis. So, and also, as I told you, incomes have not been going up for people. So, number of these loans have been to finance consumption because you did not have the income, you are using debt to finance consumption. So, those are worrisome signs. And as I always say that if banking and lending was not such a big part of the index, I would be happy to ignore it because this is a very risky segment always because negative surprises come more often, and as an outsider you don't know where and when the negative surprises will come, and growth in this sector is not always a positive because lending out money is easy. It's getting back the money when the issues arise. So
absolutely,
always a sector to be cautious about.
as a banking analyst, when you start the job, your senior tells you if you owe the bank 5,000 rupees, it's your problem. But if you owe the bank 5,000 crore rupees, then it becomes the bank's problem. Let's hope we don't reach at that level. But yes, credit servicing as a percentage of disposable income is rising, and that's a point of pain which might sort of blow up in our faces. But yes, banking looks pretty good. And our erstwhile favorites, your first research report on HDFC Bank, I'm sure you remember it more than anybody else. The bank is back in focus now, above 1700 rupees. Devina and I go back a long way. We have a lot of stories to swap on the markets, and I'm hoping she's in Delhi. We'll have a nice meal and discuss over them. Devina, where is froth? Where are you staying away completely?
Sorry, I missed this question.
I'm asking, where is froth in the market? Where are you staying away completely?
As I told you, for stocks below 5,000 crore market cap, below 1,000, we don't even look at that. And 1 to 5,000, we normally have about 14-15% of our portfolios there. We've gone as high as 20-22%. Right now, we are at 7%. So you can say that that's an area as a whole. I mean, there will be stocks which will be exceptions, but that's where I see risk. And there are also, I mean, especially, along what happens is that in small caps, there might be a few good companies. I'm not saying they're not, but along with the good companies, a lot of pretty shady companies also start to be touted, and there are, and for a short time, you might even get the returns on them. But when that segment crashes, there is no exit. So people who are new in the market may not remember this, but that's how this part remains. Also, I mean, there are anywhere where there is too much hype, you have to be careful, including, I mean, IPOs or fundraisers. I see now, I mean, this is again a sign for me when people start to talk about a fundraise as being a positive for the company. And that normally is not a good sign at all, because an equity fundraise dilutes equity, dilutes return ratios. And when people start saying that, oh, this company is doing a QIP, a qualified institutional placement, or a public offer, all that usually signifies that at least for that segment, the market is topping out. And if you see even 1 year returns for Nifty versus broader indices, there is now a reasonable gap.
Absolutely. That's a very well made point, and also my next question. Devina, it becomes impossible to track the number of block deals that are happening, and in 7 out of 10 cases, it's the promoters who are liquidating at what is now a record level. We don't know what it will be 3 months, 1 year later. But the sensible and the practical ones who see money available on a platter are diluting their stake. Being a very long-term watcher of the market, how do you see this? Will it derail the bull run, or will it add to liquidity and maturity of the market in the secondary space?
Well, in theory, you will say that it adds to the liquidity, but and also in theory, the promoter should diversify their own investments or their own net worth. So I do not always see that every block deal or every sale by a promoter, whether here or elsewhere in the world, as a negative. But when it becomes a pattern, when too many promoters are doing this, it shows, at least in their mind, they know what is the future of the business. And while, again, as a one-off manager, promoters may not be always a great judge of what the value of their stock should be. But, again, as a pattern, if many are doing it, it shows that at least they think the stock is overvalued. So that's definitely, all these are just signs, and all put together is what gives you caution on certain segments of the market.
Fair point. Devina, it's no longer a pattern, it's a collage. I maintain a list of blocks that are done, on a daily basis because it's our job as market observers to track them.
Right.
But 65,000 crores so far year to date, and the drum beats of promoters' footsteps partially exiting the Lal Street get louder and louder. Nevertheless, this is what markets are, and this is how markets behave. It's all good news for mutual fund managers and PMS managers that you get liquidity at a certain price, and these are elevated levels. Let us enjoy the bull market as long as it lasts. But
And
what
also
about
remember,
IPOs? What about the SM? Yeah, tell me.
yeah, I said, and also remember that the small cap index crashed nearly 80% in 2008-9, came back to those levels after 8 years, and which was actually a totally different index. The stocks that fell never came back. And then there was another mad bull run for 1.5, 2 years, and then there was
Yes.
another two-thirds crash. So, for the newbies in the market, those are numbers to remember. And when things fall, everything falls. In 2008-9, how many of the small caps didn't fall? 1%. In 2018-19, how many did not fall?
Yes.
8%. So you are not this genius who will be in only those 1%. So please remember that. So,
Yeah.
I'm sure many of you would have made a lot of money in that end of the market. Now is the time to book those profits and put it in steadier stocks.
Right. Devina, nobody wants to listen to caution. At parties, at dinner parties, at weekly meetings, professional and personal friends are not interested. उन्हें नहीं सुनना रिस्क क्या होता है, उन्हें नहीं सुनना क्या हुआ 2008 में, 2015 में, उन्हें सुनना ही नहीं है. But like I said, these are characteristics of a trending bull market, and we have to accept them even if we don't agree with them. My final question to you, because you are a global fund manager and you can put it in the right perspective, India's edition in the JP Morgan bond index starting today, how do you see that changing the landscape of Indian borrowers over 2-3 years, how we manage our forex, and how does it sort of complicate or improve RBI's functioning?
Yeah, RBI will have to be more careful, and I think RBI normally is anyway a fairly cautious regulator. So I'm sure they will manage the foreign bond raises by companies, and but only thing, of course, what happens is that India is a capital deprived economy. So any window that opens us, as we are seeing even in the domestic market in IPOs or follow-on offerings and so on, that there's always a crowd at the door. I remember, whatever, almost 30 years ago when the GDR, the Global Depository Receipts market opened up, and the Indian companies started to raise money overseas. This was equity money, but I thought it would be a big market. But when we looked at the data, we found Indian companies were 90% of the GDR market. So that's what happens at any thing that opens up. There's a rush for that. But on the debt side, I'm sure RBI will put in enough controls so for it not to go out of hand. But companies also sometimes forget the currency part of it and are too attracted by the interest rate number. So I hope, at the corporate level, the managements are also cautious.
Right. Thank you so much, Devina. What a pleasure to have you on Market today. It's been such an exciting 30 minutes of understanding your thought process in this bull market. And of course, the caution that you repeatedly mentioned, and the caution that repeatedly will be ignored by the border markets. That's how bull markets are, and that's how we live with them. Should you be in Delhi, you are more than welcome to have a meal with us at our wonderful office. We look forward to hosting you, and as always, learning from you.
Thank you. Thanks for having me.
That, ladies and gentlemen, was Devina Mehra, founder of First Global and one of the finest fund managers and outperformers that we have in this bull market. I hope you enjoyed this conversation as much as I and our team did. Thank you so much for watching. News continues on Business Today Television. It's a rainy day. Stay at home if you're in Delhi. It's chaos outside, but the markets are in very good shape. 88 points higher on the Nifty at a record high, and 140 points higher on the Nifty Bank, around 53,000. Thank you so much for watching. Remain glued.